The inflation numbers just came out a couple days ago, and this is what we're seeing. The challenge with each and every time we get a report like this is that everybody freaks out, especially people within buying and trading stocks, and then also the bond market completely flips. As you sit in the potential purchase of a real estate property or residential or commercial, you really want these numbers to come down, because what happens is once they come back and they're up, the Feds, the chairman specifically, says we need to hold off on lowering interest rates, which actually each interest rate is not affected exactly for real estate purchases from those conversations. But what happens is the bond market reacts and it fluctuates, which ultimately puts pressure on the mortgage industry, and those rates go up. Once that Fed chair talks about it, it fluctuates and changes by the second, by the day, and ultimately puts people into a disadvantage when they go buy any type of piece of real estate. So when we look at these reports that come out, from inflation to the jobs report, we want to make sure that we see what is coming out and ultimately how it's going to affect us on the next 30 to 60 days. Everybody's been talking about the Fed's dropping interest rates. I don't think we're going to be dropping for quite some time. I think it's going to be later this year, closer to the election, to be completely honest. And I know that the Feds have talked about potentially lowering them come summer. I think it's going to be later summer into almost October that they start potentially reducing them, because there's still a lot of headwinds, as they like to say, that are challenging each and every industry. Even with all the layoffs, even with everything else that's going on, we still have these challenges of inflation and the market still going up, with a good amount of job reports coming out and saying, hey, we've added jobs, even if those jobs are not exactly accurate to what we've seen in years past. For you as a real estate agent, lender, mortgage professional, or an everyday consumer on the purchase and or sell side of real estate, this is what I need you to be thinking of. And this is what I would be doing if I was on your end. And I help a lot of consumers, a lot of clients buy and sell real estate. As we go through this year of 2024, I don't think it's going to be as good or as bright as a lot of people think, because the Feds did come out and talk about at the end of 2023, they were going to drop the interest rate 3 times. Everybody thought that that was going to be already happening in January and February. However, that's not the case. Some people have talked about, and I even thought at the end of last year, it would be in March. I don't think that that is ultimately going to be what will happen. It will be pushed to December, it will be pushed to late September or early September. Right around that time is when they'll start talking about it and ultimately do it. So these conversations of, hey, we're going to hold tight, we're not going to drop it, really has a bad influence on the bond market, which puts us into a tailspin when it comes to buyers getting more excited about buying. Those affordability conversations that everybody's having, that's where we run into the challenge, because if the interest rate stays at where it's at, or they have conversations to say, hey, we're not going to reduce the interest rate, it keeps the bond market at the actual bond amount, where you see each and every time your interest rate is either staying put or going up, those bonds affect it. So his conversation, Jerome Powell, will affect the bond market and ultimately come together where buyers still cannot afford the property values that are trading today. And if someone says, I think that this is still going to make a market crash, look at the inventory. I've had multiple people on my podcast that you can find on YouTube where they've said, if there was a huge supply release on properties, foreclosures and stuff like that, which we don't see, that will dictate what prices do. However, prices have not dropped because we're still very tight on the amount of properties that have come to the market in the past month and a half, to even the past year and a half. Going into the first quarter of 2024 and into the second quarter of 2024, buckle up, because I believe that we're still not going to be dropping prices and or dropping the interest rate from the feds until about late summer into August and September. So I still think we have some time. And the double-edged sword there, as you see and everybody knows, is when we get to a election time of year, people still believe that it's going to drop the economy. Doesn't matter if it goes to the red side or the blue side. It's still in people's mindset that that will drop the economy. So people take their cards off the table or chips off the table going into October, November, December, and start up January, February. So at this point, we're February 24. I think there's going to be a huge drastic change come 25. But prior to then, I think we're still going to have a little bit of challenges and headwinds, as they say, or hiking a couple of hills to get past a lot of these issues that we see on the forefront of 2024. We have some time. We're going to go through this first quarter and finish it out. We still have about a month and a half. But as you look forward, just know that you shouldn't be prepping your clients for a decrease in interest rates anytime soon.